But let's focus on our personal finance corner then. Harsh Roongta of Apna Paisa joins in. And let's also get to our first caller. Ayushman calls in from Mumbai. Hi Ayushman.
Hello.
Hi. What is your query today?
My question for Mr. Roongta is it good to include index funds in one's portfolio?
Okay. Alright.
Go ahead, Mr.
The
Roongta.
advantages of having the index funds.
Did you have a particular index fund in mind, Ayushman?
No, none in particular. I was just thinking about adding to the portfolio and was considering investing in index funds as an option.
So I think, see, the general theory and the worldwide theory is that it is very difficult for a fund manager to consistently beat the index, and that's why index funds are so popular overseas. The charges, of course, because there isn't a fund manager. A computer is the fund manager in an index fund, and therefore the management charges are low. And the theory is that since a fund manager anyway consistently cannot beat the index, it is much better to just invest in the index. Now that's theory, and that's almost proven worldwide. In India, of course, I think we have seen that almost all the well managed active funds have beaten their respective indexes consistently. So therefore I think that theory in India still needs to be proven. I think it will take time. The differences are narrowing a little bit, but still well managed active funds are beating the index. So therefore I would not be in a hurry to shift from actively managed funds to indexed funds. Having said that, I think a certain portion where you don't take a fund manager risk, and more so like most investors, if you are really lazy and don't really want to keep track of monitoring fund management, etc., then index fund is a fill it, shut it, forget it kind of an investment. And therefore for large caps I would have a certain place for them definitely. So a Nifty index for 20-30% of your portfolio, definitely it's more conservative than an actively managed fund.
Any specific names, companies that have these funds, or they are all just as good?
So in index funds you have two choices. Let's say we're talking large cap. If you can do the effort, then obviously ETF, a Nifty benchmark, or now it's whatever it is called now, the benchmark Nifty ETF. Otherwise you have a Fidelity or you have a Franklin index fund. Depends on which index you want to follow. So one index is not the same as another.
Fair enough. Okay, Harsh, thanks a lot, Ayushman. Let's